let's take a look at the parameters that the system offers. The trading parameters. We can change the seconds of delay between the trade cycles. By default, it's set to 1 day, which means the most number of trades you could get on any market would be um, 1. So I'm going to change that. I think I've already changed it, but I'll show you. You select the menu option. It tells you what it's currently set to. I'm already set at 0 seconds. I'm just going to change it to 1 second. Okay. Now you can change the minimum price percent distance between trades. By default, it's 3%, which is actually pretty high frequency trading. I've seen this as low as 0.5 on KuCoin to create tons of trades. I mean, like over 100 a day on each market, you know. And if you're trading 20 markets, and over 1,000 a day for sure. And even at 3%, you're going to have a ton of trades compared to 10%. 10% I ran for 7 months or so on Coinbase and had fantastic results with that. So with this version, I'm going a little more high frequency. I want to see that um, the forecasting is more accurate the more trades that there are. So if I've got tons and tons of trades, each a minimum of 3% apart, I'm going to get accurate forecasting by just a couple days from now, right? So the next option is equilibrium mode. When it's set to true, the value of remaining coins equals the quote allocation after every trade. So you've got a 50-50 value split after every trade. There will be a skew over time, and it'll get a little bit off balance, but it won't be much. Volatronix is basically it's the limit of making the most amount of profit possible, or the highest unbiased growth possible without gambling, without creating any probability of a negative unbiased growth. Um, and this equilibrium mode just basically trades half that size, right? That's how the math works out. So menu option number 4 is mock or real. By the way, I do not recommend using equilibrium mode. Some people have wanted it. They like the concept of rebalancing, and basically this is like rebalancing, but preemptively. The trade that you're placing creates the balance rather than placing a trade and then rebalancing afterwards, which is, yeah, in my opinion, inefficient. Anyway, so you can set it to mock or real trading mode. In mock mode, it'll run through the trade cycle and signal its intentions on wanting to buy or sell, but won't actually place the trade. So you can, check that out 100% risk-free, I guess. And then we've got a momentum filter, right? So in times of high momentum, the candle sizes are going to be a lot bigger, and in times of low momentum, the candle sizes on a particular time frame, a candle meaning the open price, the high price, the low price, and the closing price within a time period, right? There's 5-minute candles, there's 1-hour candles, there's 4-hour days, weeks. You can set the time frame and the number of bars on the momentum filters such that you're going to make sure that the recent range of the highest high minus the lowest low of the last X candles, the last X bars on whatever time frame, that's the range that the price has to move farther than that since the last trade for the trade to go through. And this just means you'll be getting random trade sizes, but they're always perfectly scaled with the Volatronix formula for the trade sizes. And I will say that this will throw off the forecasting a little bit. It's better. You get more accurate forecasting if all of the trades are approximately the same distance apart. And then you can choose the number of bars in the momentum filter. And this last option here, people have requested it, but I don't really recommend using it. It's force a minimum trade. So let's say if you want to do high frequency trading and you've got this set at 1%, but you only have $20 invested, and 1% of $20 is only 20 cents, but the minimum trade size is actually $1. Force minimum trade will say, well, if I have $1, I'll use $1, even though the price only moved 1%. Now, this situation can actually give you a negative unbiased growth. We go from the limit on safety into the realm of gambling. So I do not recommend using force minimum trade. I think it would be better to trade fewer markets with enough allocation such that the minimum trade size is always available at whatever percent minimum distance between trades, right? Like basically how it works, if the price goes down by 10%, you're going to spend 10% of the remaining dollars on the coin. And if the price rises by 100% divided by 90%, that's like 111%. The price rises by 11.11%, you're going to be selling 10% of the remaining coin. Okay, that's how it works. But when you force minimum trade, that can throw the system off and actually produce a negative unbiased growth. Okay, and this last option, number 8, looks like I have to remove a line here. Last option, number 8, is the V-score volume filter, which will apply to uh, I believe two of the V-score options, where you're sorting or where you're ranking the markets that you have, that the markets on a specific quote currency, or the markets that you're not trading yet on a specific quote currency. The volume filter will ignore all of the markets that are lower than average volume and only consider the markets above average volume. And volume just means is how much money is moving through these markets being traded on a daily basis. You have the best chance of order execution on high volume markets. Um, yeah, okay, so that about wraps it up for the parameters, and see you in the next video.